G'day folks, welcome to the weekend general update for the 3rd of November. And markets were going along reasonably okay during the Friday night session. We of course had two sessions lost in the US due to the hurricane over there. But once the market came back on, we had a strong session on Thursday, and Friday's session started very strongly, but then turned around very abruptly, and it's not really clear exactly what caused that. I have a suspicion that part of it was purely a technical rejection from some resistance levels, and then the computers took over and really pounded it back down again. But certainly the fundamental data did not support the stock market and commodities being sold the way they were. So we'll need to have a look at early next week to see whether there's any follow through on that. So let's have a look at the action for the last week, even though it was a reduced week in America. This is, of course, general advice information only. So the S&P index, in the end, gained 3 points on the week, but there was a really strong rise on Friday night to 1434 before a pretty dramatic turnaround. And it looks very much like an overreaction to me to what was pretty good data. The jobs data was 170 odd thousand jobs created in October, which was about 50,000 more than expected. So I'm not quite sure what the market was really looking for. Now the ASX 200 index ended up closing by 12 points on the week, and there was some heavy selling with reports that there was some overseas, or a large overseas fund that was selling very heavily a portfolio of stocks, and we saw that particularly in the financials. Hopefully that's run its course now on Thursday and to a degree on Friday, and our market can resume normal activity. So it's a bit hard to know how we're going to respond on Monday, because we've already had a pretty good sell-off on Thursday and Friday. So I'm not really sure how our market's going to open and trade on Monday. Now resource stocks, interestingly, were the big gainers on Friday. Banks lost ground, but resource stocks actually were quite strongly higher. So that's an indication that the sentiment surrounding China and surrounding commodities is really quite buoyant and recovering. And also the small cap stocks remained fairly steady as well. So that's a good sign as well. If the market's about to fall apart, then the small caps are going to be taking an absolute beating. Now the US dollar index, there was just an inexplicable large breakout on Friday that I have no explanation for at all. Under normal circumstances, you would think that there was something that frightened the market back into US dollar and back into bonds. That certainly wasn't the case, so why the US dollar had such a large rise is completely beyond me. Now bond yields in Europe, Spain still sitting around the 5.5 level, which is acceptable, and Italy just under the 5 mark. So not really much change there in the last week. Now gold was the big mover, declined a further $29 in the week just gone, and all of that was on Friday and a bit more. It was about a $40 move on Friday. Now part of that was currency, but part of it I think is just technical, because gold really hadn't got down to exploring the bottom of where it would normally find support. We'll have a look at that chart in just a minute. So 1668 is the next support, and I think there's still an ABC counter trend correction progressing. The main trend is up, and this is just one of those intermediate corrections. Silver suffered a very big fall on Friday, and likely to probably decline a little bit more, and $30.37 is now the target. Copper eased to $3.48. That was largely currency impact. In fact, copper held up pretty well considering how well the US dollar went up. And oil back down to 85 again. So let's have a look at a few charts, and we'll start with the US dollar index. and you can see we'd been in a consolidation pattern, in a sideways consolidation pattern really since about the middle of September, and then we just had a big breakout on Friday night. Now $80.60 is a retracement level that will be interesting to observe, and the market got to $80.61, so basically spot on there on Friday night. So really the future of the immediate future of stocks and commodities will depend very much on the US dollar. Now looking at the S&P, you can see that we did actually trade higher, so it opened here about 1427, traded up to 1434. Terrific jobs data came out, and then the market just got smacked hard. So I would like to bet that it's pretty technical. Now we've got support down at 1395, and I suggest that we might still see that level yet. So we could just see a little more selling yet before we can get into that final end of year rally. And perhaps this is just a bit of apprehension surrounding the US election, which is next Tuesday, and once we get through that and know the outcome of that, then markets will perhaps behave a little more predictably. Now looking at the European markets, this is the German DAX. So you can see since the lows in June, the German DAX has moved from just under 6,000 points to now be about 7,400 points, and that's been pretty robust and no real correction back there. So certainly Europe markets looking far better than the US markets. This is the FTSE, which is the London index, has moved from the low 5,000 mark to almost 6,000 points now, and also looking far more resilient. And the final one I want to take a look at is an ETF, which is Europe's top 350 companies. Now we've seen a move from $31 to about $36, so that's about a 15 or 20% move, and these are the largest stocks since July, so that's a pretty good move when you're talking about purely large cap stocks. So certainly the stock market rebound in Europe is continuing unabated. Now have a look at our particular main index, the ASX 200. You can see that we'd had a terrific run. Our market had outperformed for most of the last 3 months and was going along quite well. We had a mild correction over the last week or 10 days, and then we got, just out of the blue, this sudden sell-off on Thursday. Now that was on the back of some very good manufacturing data in China, and we'll look at the Shanghai index in just a minute. So that data on China came out on Thursday. The Shanghai market went up strongly on Thursday, as we'll see in a minute, and yet our market got, or the index anyway, got smacked, and that was pretty much across the board selling. And then we were performing better on Friday, as you would expect, but then the market sold off again into the close. So obviously still the impact of that heavy portfolio selling. Now just looking at the Shanghai index, you can see it's certainly been in very, very substantial decline, but would appear as though it has bottomed, and you can see there is a trend line down through here which it's broken above, retested, broken above, and now is forming basically higher highs and higher lows. So if the Shanghai index can move up just a little bit further, then it would have completed a breakout, and we can look for that to move higher, and that'll obviously be positive for Australian resource stocks. Now let's have a look at what happened to gold. This is Friday night. You can see sharp move. So we'd broken the first support at 1717. 1692 was the next level. We blasted straight through that on Friday night. So 1668 will be the next level that I'm looking for. gold finished at 1677, so we're looking for about another $10 to the downside. Now you'll notice that we're now getting down to overbought. It was why I was a little cautious that we'd actually seen the bottom in gold, because I would prefer to have seen the RSI oversold. I would prefer to see a reversal off one of these support levels. So I'm surprised by the severity of that fall on Friday night, but I'm not surprised by the fact that it has happened. But look, the main trend in gold is up. This is just setting up an even more attractive entry point for both gold and also for gold stocks. If we look at gold on a weekly basis, you can see we've formed a double top up there. We've now pulled back from that, and we expect we'll see a base. November and December are traditionally the two strongest months of the year for gold and silver, and also for stocks. So I think we've still got a pretty good period ahead of us. Now silver copped an absolute thumping on Friday night, so 1337 is the area that I'm looking for. We're certainly getting down towards being oversold on silver as well. Now here's the spot chart on copper, the 6 months chart. We certainly have declined back from the highs at 380. Part of it is currency effect. I would suggest to you that maybe a half of it is currency effect, and a half of that is basically copper trading at a slightly lower level. But $3.50, these are still very buoyant prices for the better copper producers. So overall, the strategy hasn't changed from last week. The corrections haven't finished yet, so they're still in the process of playing out. I would expect we're getting close to the end of that now, so patience will be rewarded. The medium-term stock trends are higher. The medium term for gold and silver is higher. So we've just got to wait and buy the dips on gold stocks is one of the key focuses at the moment. So that's it for this week. I'm still very bullish on the next 2, 3, 4 months, and I think we've got some really good money-making opportunities in front of us. That's it for this week. Cheers.